A very good morning, guys. I hope that you are doing well and are holding up with your status. I did promise that I will be going through a very detailed question, and I am keeping up my end of the bargain with regard to that. Today, we are going to be dealing with a very, very important question. What's a very detailed question? And you will see that we will be covering a very, very important concept in line with fringe benefits as well as the allowances. Now, with regard to the question that is on the screen, you have the question here. If you start reading at the top, it says that Jasmine is a resident of South Africa. Now, that is very, very important. So, we are being told that we are dealing with the resident of South Africa. Okay, and the other thing that they are telling us is that this is married married. So if a person is a resident of South Africa, he will be or she will be taxed on a worldwide receipt and accrual. We are told that the person is married. So if the person is married, you have to think about those things within the joint estate, the splitting between the paid figures. Okay. Now, we are also told that it's with one daughter, and the daughter being Sarah. Okay, so they have a daughter. Okay, so being told about the daughter, and then she is the head of the sales of Genie Pty Limited. Okay, working for Genie as a sale agent, and then we are being told and has worked for the company for a continuous period of 16 years. Now we're being told about the number of years that this person have worked for. Dates may be important in terms of like the awards, sometimes in line with our paragraph 5 in conjunction with paragraph 2 little a of the 7th schedule. You'll find that an employer may decide to give award to employees for the long services of work that they've actually performed within the company. As a result, they may get some sort of a token of appreciation or a award with respect to the services that have been rendered. And such services have to be included, or such award, we have to determine the value for it and then include it in our gross income. Now, as part of her job, she was required to travel to a number of clients. So we are given some sort of an indication with regard to travel. So Jasmine will be traveling. That means that we have to think in the lines of the travel allowance being granted to her, and also the motor use allowance should the need be. Okay, and you have to take this into consideration, most especially the way in which we deal with the calculation of the travel allowance and the way in which we deal with the calculation of the motor use vehicle concept. We will be looking at it very closely. However, what we are getting in this line is that we will be dealing with a situation of a travel allowance, and then we have to think as to how then do we treat it and how is it included in the gross income. For what we know is that the fringe benefits are included in our taxable income, and also in terms of the allowances, they are included in our gross income in line with our section 8 subsection 1. Okay, now we are being told that as part of her job, she was required to travel to a number of clients using either her motor vehicle. So you can see we're being told that she also uses her motor vehicle or the motor vehicle that is provided by Genie. Okay, so she can either use her motor vehicle or the motor vehicle that is provided by Genie. Sometimes you find that an employee is actually using two vehicles at the same time, and then we have to then deal with that in line with the provisions of section 7 subsection 6. Now this is very, very important to take into consideration. Now, as Jasmine had been working for Genie for a considerable time, Genie has allowed Jasmine to use her motor vehicle to travel to clients who were for who were far out as her motor vehicle were more comfortable. Okay, now due to the extensive time that Jasmine had been on the road, she had decided to retire. Now we're getting something here. Okay, we are given the information about Jasmine deciding to retire in order to pursue her dreams. So she's retiring so that she can pursue her dreams. Okay, now on the 28th February 2019, Jasmine retired. Now that is very important to take note. When is this individual retiring? She is retiring on the 28th February 2019. We are also told that she's retiring because she have reached the age of retiring at 60 years. Okay, now on her retirement, which is the 28th February 2019, she was awarded the following. Now we're getting some sort of an indication of items that she is awarded. Now what I've said is that such award have to be included in the in gross income in line with our fringe benefits in terms of our section 7. So we have to then refer to our section our the 7 schedule, not section 7, the 7 schedule, because the 7 schedule is the one that detailed or that explained quite nicely as to how then do we treat such figures. Okay, so you'll notice that with regard to this information, we have to then make reference to our 7th schedule. Okay, now I've decided to share the link under the screen or the projector. You can see in terms of the 7th schedule, in terms of paragraph 2, paragraph 2 little a, what it states is, it says, for the purpose of this schedule and the paragraph I for fringe benefits in section 1 of the definition of our gross income, it says that a taxable benefit shall be deemed to have been granted by an employer to an employee with respect of the employee's employment, and we are also told that such benefits or advantages of or by virtue of employment as a reward for services that have been rendered or by the employment contract that exists between the employee or the employer, and then they start listing these items. Okay, now it's very important for you to note that paragraph 2 of the 7th schedule is used with other paragraph. For example, we use paragraph 2 in conjunction with paragraph 5 to determine the value of the items that might be given as an award. Now if you turn over in your ledger, you will notice that in terms of paragraph 5, it's talked about the acquisition of an asset at less than the market value. And in terms of paragraph 5, subsection 3, it then brings into consideration the no value concept if the asset value of the item that is given to an employee by an employer is less than the amount of a 5,000 rand. But we'll go through this in detail just now. Okay. Now, if you look at the next information, we're being told that there is a golden bracelet with a sales value was 6,100 by Genie. Now, it is a policy of the company to present all the retiring employee who have actually served it for at least 10 years with these bracelets. Okay, so we're given some information in regard to the bracelets. If an employee have actually worked for a period of at least more than 10 years, you will be presented with a bracelet, which is representing some sort of an award or a fringe benefit, which we will then have to include in our gross income when we are calculating the taxable income. Now, they are also telling us that when Jeannie purchased the bracelet for Jasmine, an additional 5 bracelets were purchased for other retiring employees. Okay, now we told that as a result of the bulk purchase, Jeannie enjoyed a discount that resulted in the cost of Jasmine bracelets being 4,500. Now there's something that should ring a bell. which is the no value concept. Now, in terms of paragraph 5, subsection 3, you'll notice that it then brings in a concept of a less than 5,000 value. You can see that the cost of this item or the consideration is actually less than the amount of 5,000. That means that in with this regard, or with particular to this award, we will then not include it. It will be a nil value in terms of the 7 schedule, since the cost to the employer was less than the 5,000 rand when acquiring these assets. Okay, this is very, very important. So in terms of putting it in the answer, what you'll do is you'll then say, okay, so we're talking about the golden bracelets. Say we are dealing with the calculation of taxable income. So what you will do is you'll then say we have this golden bracelet, and then what you'll say is this is a null sort of a value. The reason why it's a nil value, it's in line with which paragraph. It's a nil value under which paragraph? Under paragraph 5, subsection 3 B. And then what you then have to bring into consideration is that the employer actually incurred the cost, which is less than 5,000. Okay, so the employer Okay, so the employer incurred a cost that is less than 5,000. So that means that we're not going to put anything in our taxable income in relations to this. Okay, and then if we continue with the information, you will notice that they then start talking about a concept of a watch that is given to her by the fellow employees. Now, the employees had actually contributed toward the 6,000 cost of their gift. So this is a gift, and it's not as a result of employment. Now, one of the things that you need to take into consideration is that if you are given a gift by other employees or by fellow employees, you will actually have to take into consideration the fact that it will not be included in our gross income. Okay, why? Because you are getting a gift and it is not as a result of employment. Okay, so such then is not as a result of the services that have been rendered with the employer. Very, very important. Okay, now if you continue in terms of the information that is presented to you, you notice that Jasmine remuneration proxy for the 2018 year of assessment was 450,000, and her other receipts and the accruals, we're being told that these receipts and accruals and expenses for the 2019 year of assessment are. Now, one of the things that I've noticed with regard to this information is that we are given a remuneration proxy. Okay, the remuneration proxy is a very important figure that we use when we are dealing with the residential accommodation, and you will see that when we are dealing with the calculation of the residential accommodation, we use the remuneration proxy, the abatement, and we also need to find out as to whether the house or the flat is fully furnished or it's unfurnished, who is paying for the water and the power, and we will then deal with those in full, or we'll take those into consideration in line with paragraph 9 of the 7th schedule. Now, in terms of the receipts and the accrual and expenses, what we are given here, we are given the information with respect to the salary, and we know that the salary will be included in gross income in with respect to the paragraph literacy. Okay, in terms of our special inclusion. Okay, so it will be included in our gross income with respect to our paragraph C, special inclusion. Before we do that, maybe let's write down the information or the treatment of the watch. So the watch from the fellow employees, we said that this is capital in nature. Capital in nature, number one, it's capital in nature since it's a gift. And also, this is not as a result, not as a result. It is a result of services rendered. Okay, not as a result of services rendered. Okay, so it's not going to go into our taxable income. Now, we're being told in our question that Jasmine actually received a salary of 50,000 a month. Okay, so you can see that we have a salary, and we know when we are calculating the taxable income that the salary is included in line with paragraph C, and then you put the value of the salary. You told very nicely that the salary, the cash salary, is of 50,000 a month. So if it's 50,000 a month, when we are determining what will the salary be per year, what we'll then have to do is you take the 50,000 and then you times it by the number of months that this employee have actually worked. Okay, you have to times by the number of months that this employee have worked, and we know that this person, he worked for the entire year. Okay, so he worked for a full year because you retired at the end of the year, which means that it's 12 months. Now, if you use your nice and your beautiful calculators that side, let me punch this on my calculator. We know 5 times 12, that's 60. So that should be 600,000. So if I say 12 times the 50,000, it's giving me 600, exactly 600,000. Okay, because if we say 5 times the 12, that will give you 60, and then you also incorporate the zeros, so you can see then we are getting 600,000. The next information that we have to take into consideration is with respect to an annual bonus. We are told that an annual bonus of 70,000 was received in February 2019. So you can see here, this will also be included in our framework. So I'll put the annual bonus. So our annual bonus, if you put the bonus, you know it's included in line with the services that have been rendered. So para C, our reasons, and then you'll put those 70,000. Okay, it's given to you quite nicely. The next thing that they asked, the next thing that they are asking, they are talking about a 12-day holiday at a beach apartment that is owned by Jeannie. Now, the accommodation is let to a non-employees. It's actually let to non-employees at a rate of 200 Rand a person per day. Now, be careful. A person per day. Now, this is in line, and they are talking about a holiday apartment. So what I will highlight is the holiday apartment, and they are talking about a 12-day duration. Okay, so a 12-day holiday at a beach apartment owned by Ginny, and the accommodation is let to non-employees, and we are told about the rates. The rate is 200 Rand, and they are saying per person. So that means that if like we are calculating the amount to be included in gross income in with respect to this holiday accommodation as a fringe benefits, we'll have to then consider as to how many days actually use this holiday accommodation, and also the number of people that are actually utilizing this accommodation, as well as the cost per single day. So for example, if like there's 5 people who are using the accommodation, and then the cost we're being told nicely is 200. So we'll take the 200 and then we'll times it by the number of people being 5, and then times by the number of days they are occupying the premises. In this instance, you are told that Jasmine with her husband and a daughter. So how many people are actually using this accommodation? We have Jasmine, we have the husband, we have the daughter. There's 3 people who are using the accommodation. But someone will ask me and say, Tabisi, but where are you referring to this, or where are you getting this information with regard to the holiday accommodation? Okay, the information with regard to to the holiday accommodation, the treatment of it, it explicitly stated nicely within the 7th schedule, paragraph 9, subsection 4. I'll put it on the projector so that you can see what I'm talking about. There we go. If you look nicely, they are saying that the rental value to be placed on the accommodation that is occupied temporarily for the purpose of a holiday shall be where such the accommodation is hired by the employer from a person other than an associated institution in relation to the employer. So much of the rental payable and any amount that is charged in respect of the meal, refreshment, or any services that services resulting or relating to such accommodation as have been borne by the employer. So you can see in this case that such are being borne by the employer in this instance. And also they're telling us that in Little B, they're saying that in any other case, an amount is calculated at the prevailing rate per day. So in this instance, our prevailing rate per day is the 200 rand that is explicitly stated in the question. Okay, so the way in which then we treat these fringe benefits, we're told that they stayed at this apartment for a 12-day period in the month of December. So what we then need to do, we need to say, okay, we have a situation of a holiday accommodation benefits that they are getting. So the way in which you deal with this in terms of calculating the taxable income, and then say, okay, so we have a situation of a holiday accommodation, and then you know that this holiday accommodation, we're told that there's how many days they're using, 12 days, and the number of people who are using this accommodation is 3, and it's 200 rand per person. And we are including this in our framework in line with our paragraph 9 of the 7th schedule, subsection 4. Okay, this is of the 7th schedule. Okay, you can write it down. This is in the 7th schedule. Okay, now we've actually dealt with this quite nicely. If you put it on the calculator, let me then put it for you so that we'll get the correct figure together as a team. So if you put 12 and then you times it by the number of people, we said it's 3 people, and then you times by 200 rand. So you times by 200, you are getting 7,200. I hope that you guys on that side as well, you are getting the same figure. So let then put it nicely. So the amount you're getting 7,200 with respect to our holiday accommodation. Okay, so you can see that the treatment here for the holiday accommodation, we've dealt with it quite nicely in line with paragraph 9 subsection 4. Then the other information that we are given, we are being told that Jeannie pays 30% of her monthly cell phone account. So Jeannie is now responsible for paying the debts of an employee. Okay, now this is it's explained quite nicely in terms of paragraph 13 of the 7th schedule, where an employer is releasing an employee from a debt. Such will be treated as a fringe benefit, and it have to be included in gross income. In the calculation of on the computation of our taxable income in relation to the amount that the employee have been released from such obligation. In this instance, we are told that the total amount that is paid during the 2019 year of assessment was 1,500. Now she paid the balance of this account each month. Now she is required to make the occasional business call using her cell phone. Okay, so you can see that also with respect to this, in terms of the employee being released from the debt, one of the things that you are getting is the employee is also required to use the assets for business purposes. Okay, however, we said that in terms of our paragraph 13 subsection 1 of the 4th schedule, it's explained it quite nicely as what then do we do with the when the employee is being released from the date? Okay, so what we then need to do in conjunction with paragraph 2, in conjunction with paragraph 2 of the 7th schedule, we then have to include the value of the amount that an employee is released from such an obligation. In this instance, we told nicely that the value that was paid in relation to the 2019 year of assessment, they told us nicely it's 1,500. So what we're then going to do is, with respect to this cell phone account, so if we look at in terms of our solution, let's then put it, so we have our cell phone, okay, so a cell phone account. So we know that we are including this amount of 1,500 in our computation for taxable income, and the reason for that, it is in line with paragraph. So we're saying this is paragraph 13 subsection 1 of our 7th schedule. Okay, this is actually a situation where it's a settlement. So you can see the employer. So employer here, employer circle the debt, okay, the debt of an employee. So the debt of an employee, or you can say it's a settlement of an employee's debt by an employer. It's still the same thing and acceptable. Okay, and it's explained quite nicely in which schedule. It's explained nicely in this 7th. You have to quote the schedule. Okay, the 7th schedule. Okay, hope you're with me and you're not lost. Now, moving further, we told very nicely about an entertainment allowance from Genie Pty Limited of 1,000 a month. Now, Jasmine, sorry, had kept a detailed record of her entertainment expense. Now, we know in terms of the entertainment expense, they are included in the computation of taxable income, in our gross income. And in line with section 8 subsection 1, since it's an allowance. Okay, we said that allowances, we deal with them more closely in line with our section 8 subsection 1. Now, depending on the situation as to what type of an allowance we're dealing with, because there's different treatment. With regard to entertainment allowance, however, there is no deduction that we can be able to claim, okay, due to the fact that the expenditure is not allowed as a deduction under section 23. Okay, it's explained quite nicely in terms of section 23 that we are not allowed to deduct the expenditures that are incurred with respect to entertainment allowance. Okay, so you can see here in this instance that we told that the total expenses that are actually incurred for entertainment were 3,500 in the 2019 year of assessment. Included in the amount is 3,500. Okay, is her entrance fee of the 700 and the actual membership subscription fee of 300. So they're telling us these figures. However, we are unable to deduct these figures due to the fact that the entertainment the entertainment expenditure are not allowed as a deduction under section 23M. Okay, so what we then have to do, we need to say, okay, we have an entertainment allowance, so we can put it nicely in our framework. Sorry, so entertainment allowance. Forgive my handwriting, it's bad, it's the doctor's handwriting. So entertainment allowance in line with our section 8 subsection 1, and we're being told that the value of this allowance is 1,000 rand. Okay, we're saying that however the entertainment expenditure is not allowed as a deduction under section 23M. Okay, so we're just right on, we are on the right pace in terms of answering as well, doing well so far. So we have dealt with the treatment of the entertainment allowance, and then we also told other information here, interesting and juicy stuff. Now, the information that we told about is the free use of the two motor vehicle. Now, what we then need to then do, we are dealing with the use. We're dealing with the use of the motor vehicle. Are we dealing with the allowance, the travel allowance? No. We're dealing with the use of the motor vehicle, and we have to determine the ascertainable value that will be included in the gross income when we are computing our taxable income. And this is explained quite nicely when you go through the legislation in terms of our 7th schedule, paragraph 7. Okay, it's talk about the right of use, motor vehicle. Now, in this instance, they're talking about not just one, they're talking about two motor vehicles that are utilized by Jasmine. Now, if you read through, they're saying that Ginny purchased the new Toyota. Okay, now we are told about the information with regard to the purchases of this. It was purchased on 1 May 2018, and then Jasmine used, and then for Jasmine use, and then we are told that the value, the determined value, or the cost, or the cash equivalent of this asset is actually 356,000 inclusive of VAT. Okay, we are also told that Jasmine's husband was also given the previous financial management car. Okay, now let's first deal with the first car. That is attached a value of 350,000. Now, if I bring the legislation under the projector, one of the things that I want you to appreciate is that you are being told as to how to go about to determine the value that you are going to include in your taxable income with respect or with regard to this. If you look in terms of your framework in your 7th schedule, in terms of your